Hello, and welcome to another episode of In Trend, a USLI podcast where we discuss the latest trends, ideas, and insights facing the insurance industry. I am your host, Melissa Kanbayashi, and today I am joined by my colleague, Steve Parisi, Vice President and Head of Coverage and Specialty Claims here at USLI. Prior to joining USLI in 2019, Steve was handling insurance defense and coverage litigation in private practice for 15 years. He also managed coverage, excess, and reinsurance litigation for another carrier for 5 years. I am excited to discuss the topic with Steve today, social inflation. What is it? How is it affecting the insurance industry? And what can carriers and policyholders do to mitigate its effects? Let's get into it. Hi, Steve. Thank you for joining us on In Trend.
Morning, Melissa.
So today's topic is social inflation, and I'm sure many people have heard the term social inflation, but may not be familiar with what it means. So what is social inflation?
So, social inflation is defined as the rising cost of claims based upon societal trends and views towards litigation, really changing views towards litigation. So, not too many years ago, surprisingly, litigation was not as common or acceptable as it is now. Now it is commonplace, very acceptable, and no longer a measure of last resort. Unfortunately, due to a number of issues, and we can get into some of the factors in a little bit, but given a number of factors, people no longer think when they get involved in a car accident or fall down a flight of stairs, the immediate reaction is unfortunately not, oh, how am I going to get better? Am I going to this work? Those sorts of things. The immediate reaction is, who can I blame and how can I get paid? And this is not that new. And just like it didn't get here overnight, it took years to develop. It's going to take years of combating it for it to go away or at least get better in small steps.
Right. And so you just mentioned that there are factors that either cause and or contribute to social inflation. So what are some of those factors that we're seeing?
There are a lot, and they've developed and they grow. The biggest factors I would say would be a distrust toward big business, corporate America, way back when, and I may be dating myself a little bit here. There was a little bit more of a warm and fuzzy feeling about big companies in this country. A lot of them funded TV shows or charitable events, and that has sort of gone by the wayside. Now people see big corporations tied to scandals, Enron being
Right.
the biggest example. And people want an ability to punish big corporations because the judicial system is one of the only ways that regular people, let's say, quote unquote, regular people can have power. The judicial system does give regular people power that they otherwise wouldn't have in the marketplace to punish big business. That's one factor. Uh, Another factor would be erosion of tort reform to a certain extent. And when I say tort reform is just really the legislature's mechanism by passing a law in an effort to right the judicial system. And that is capping damages on attorneys' fees. I'm sorry, capping fees for attorneys,
Mhm.
capping certain damages, limiting the availability of punitive damages in certain situations, fee shifting. So tort reform was a really hot topic 20-ish years ago. A lot of states passing tort reform,
Right.
and it has eroded over that time period as social inflation has grown. Good news is two big states, Florida and Georgia, recently passed sweeping tort reform, which is official. But
Okay.
you know, 2 out of 50 states is not really, like I said, small steps at the outset.
Right.
So erosion of tort reform, anti-sentiment toward big corporations. A really big one is juries have been desensitized as to the value of a jury award or even the value of a
Right.
dollar. So $1 million doesn't seem like a lot of money to a lot of jurors now. They hear stories about Roundup and talc, and they hear billions. So when you watch the news and you hear that Roundup has been hit for billions of dollars, or that J&J has been hit for billions of dollars in talc lawsuits, well, maybe $1 million doesn't sound as much anymore. So jurors are more willing to hand out $1 million here and there because $1 billion doesn't sound. I mean, $1 billion always sounds like a lot of money, but $1 million doesn't sound. It doesn't have the magnitude of what it did years ago. Uh, Another factor is litigation funding. So
Okay.
you have parties behind the scenes who are funding plaintiffs' litigation. So they have side agreements where they fund their experts, they fund their fees and costs. There's very little to lose on the plaintiff side of this if a third party is funding this as an investment. So it is an investment into the litigation. And if it's successful, they get whatever money they fronted and then some percentage. I'm not really sure what it is. But litigation funding is a big driver. And one of I would say this is a little bit more recent, but a redistribution of wealth. There is a
Okay.
shrinking middle class in this country, and a lot of people who sit on juries and have power to do so use that power to maybe redistribute wealth toward uh, like I said before, quote unquote regular people against big business. Punish the big business, maybe line the pockets of someone who has worked hard their whole life, is never going to be able to maybe advance the way they would have been able to 20 years ago, but they could advance very quickly given a large jury award.
Right.
So, uh, and finally, I'm sorry, I don't know if I said finally before, but I keep adding to these factors because there are many. Plaintiffs' attorneys, advertising, plaintiff attorney advertisements, commercials, at least the way I recall it 20, 30 years ago, that was something that was relegated to midday, daytime TV. Now, but plaintiff's attorneys commercials are on everywhere. You drive up and down the 95 corridor, you see billboard after billboard, plaintiff's attorneys. You go to a baseball or football stadium, and around the perimeter of the baseball or football scoreboard, you see plaintiff's attorneys advertising. This is much more frequent than we saw 20, 30 years ago. So it's a lot of factors that have been contributing toward it.
Right. So I think I heard, just to summarize, like corporate accountability, desensitization of these jury awards, the shrinking middle class, erosion of tort reform are contributing to the rise of social inflation. Um, with the also rise of social media, do you see that playing a role in this social inflation that's happening?
Absolutely. Especially if I go in my LinkedIn app and check what's going on, there's always news stories, there's always updates and posts. I use LinkedIn to post. I see I have connections who are plaintiffs' attorneys, maybe people I used to work with. And at least twice a week, I see them posting very large plaintiffs' attorneys awards. So this is free advertising.
Right.
So instead of having to advertise in what used to be, in not that many people read newspapers anymore, but what used to be in maybe a legal newspaper, like in Philadelphia, there was always a legal intelligence front page. You could advertise that you had a huge verdict. Now you could do it on LinkedIn for free. So you do it on LinkedIn for free, and it's not just the Philadelphia area, it is the entire country to anyone you're connected with or anyone who's connected with someone you're connected with. So it is that dissemination across the country of large verdicts, which also is desensitizing to other people who are on LinkedIn, and see how high those verdicts are. It also is a beneficial tool that plaintiffs' attorneys working together, they can use that. Even if you're not the plaintiff's attorney who just got a $15 million award in a certain type of case, when another plaintiff's attorney shows up in a mediation on a case that's somewhat similar, they're going to start negotiating off of that award they just saw posted on social media. They're going to say so and so in a verdict. I'm sorry, so and so in a jurisdiction very similar to this, with a case very similar to this, just got $15 million. That's my starting demand. So yeah, social media is a big factor in this as well.
So it sounds like there's a lot of attorney tactics that are, being developed in this era of social inflation. Aside from advertising, use of social media, do you see venue shopping as an issue?
Venue shopping has always been there, at least in the area where I primarily practice in the in the southeastern Pennsylvania area, with Philadelphia County being the hub for that. Most plaintiffs' attorneys will try to get a lawsuit into Philadelphia County as opposed to the surrounding counties because the verdicts in Philadelphia County have a tendency to be higher, and they always have been. That's not as new as far as maybe venue shopping. What I see more as far as tactics are the policy and time limit demands. So there were always demands, and oftentimes they were for policy limits, but they usually happened either at the outset of the case, and it was typically verbal, maybe on a few weeks before mediation or a few weeks before trial. It wasn't a standard practice to receive letter after letter after letter where they demand policy limits and also incorporate a lot of language into those policy and time limit demands in an effort to instill some type of fear. So most of the policy and time limit demands that we get, and I don't mean we, I mean carriers when I say we, not just us, uh, incorporate very similar language and similar tactics. At the outset of the policy or time limit demand, they'll make note that this must be forwarded to the policyholder to let them know that they have the potential to have their own personal assets at risk if the demand isn't paid. And then they go through a lot of arguing as to why the case is worth more than the policy limits, and then they typically threaten the carrier with bad faith. So they're attempting to instill fear in both the policyholder and the carrier that if limits aren't paid, there could be negative repercussions thereafter. That's always been the case to a certain extent, but like I said, not as structured, not as
Okay.
routine. I mean, the frequency of it is much more significant, much higher.
So, Steve, what are carriers doing or what could they do to mitigate the effects of social inflation?
Well, I'll take the last thing I talked about first when it comes to these policy and time limit demands. The first thing that carriers can and should be doing is pushing back on them. Oftentimes, these policy and time limit demands cross many, many lines. Sometimes they're written directly to uh, insureds who are represented by attorneys. So you have potential ethical issues where they've maybe crossed the line and breached attorney-client privilege, where they are now speaking directly with a represented entity, or if it's a company, or speaking directly with a represented policyholder, if it's an individual. That's crossing the line. And when we respond to those policy and time limit demands, we must respond to each and every sentence sometimes in the letter that does cross either an ethical, professional, or legal line. The policy and time limit demands, some of them are legitimate. Some of these cases are worth a lot of money. Liability has been established. They've established their burdens of proof, and insurance carriers have to handle this accordingly. That is certain percentage. I'm not going to go into, well, okay, this percentage or that percentage. It would be very anecdotal, but the majority of them, I would say, are not supported by uh, the evidence of the case or the damages. So the case, they have yet to produce any evidence withstanding their burden of proof, or at least their initial burden of proof. And they've yet to produce any evidence that the damages would approach the policy limits or, in their minds, as they say in every letter, exceed policy limits in order to instill some type of fear in the policyholder and or the carrier. So pushing back from a carrier perspective, and all carriers really should be doing this, is pushing back. You've written a letter. You're saying that you want policy limits. You're saying that you want policy limits in a very short period of time at the outset of litigation, but you haven't given us any proof that the accident happened the way you said. You haven't given us any proof of causation. You haven't given us any proof that the damages that you're alleging are legitimate, and even if they are legitimate, would be worth at or near policy limits. So state that at the outset. Get this trend back to some sense of normalcy, if you want to think about it like a tug of war, right? If the
Right.
plaintiff's attorneys have been starting that tug of war on the other side of the line, it needs to get back toward the middle somehow. And by pushing those pushing back on those policy and time limit demands to get the tug of war to start in the middle like it used to, well, then everyone's playing from an even playing field, at least at the outset. So pushing back on policy and time limit demands is a big one, both for defense counsel that do so on behalf of the policyholders that are represented, and also from a carrier level to push back and really let the plaintiff's attorneys know that you're throwing around words like bad faith that, very loosely and without support. And, I mean, you could say it all you want, but saying it doesn't prove it. So where's your proof of this? Those sorts of things. So pushing back, that's one. The second is humanizing the insureds. I mentioned before, one of the key factors is villainizing, let's say, big business or corporate America,
Right.
saying, okay, well, how am I going to punish somebody for this? How am I going to get paid and redistribute wealth, those sorts of things? Well, it's one thing if it is a big corporation that everyone is very familiar with, but a lot of litigation involves mom and pop companies as well. The neighborhood deli, the contractor driving his box truck to and from point A to point B throughout the day who happens to get in a car accident. And for personal lines policies, whether it be auto or at least um, some of the stuff that I personally handle, personal umbrella, you're dealing with regular people who may be running an errand, driving to the grocery store. They're not villains. They're not big bad, and I say big bad corporate America, not that I agree with it, but I mean, if people want to villainize somebody and they have a target that may be a little bit of an easier target, your friend, family member, neighbor driving to the grocery store in an effort to just run an errand throughout the day like we all do and getting an offender bender, why would you want to punish them? Why would you want to villainize them? Why would you want to redistribute wealth from one person who happens to live in your neighborhood to you? So humanizing the insureds is very big. Uh, Pushing back on the plaintiff's, policy limit demands and time limit demands, like I mentioned before. Anchoring. So when I say anchoring, that is an effort to really try to combat what juries see as, when I say juries are desensitized as to large verdicts. So the plaintiff's attorney is going to say, oh, there's a case like this. We settled a case just like this, $15 million, that kind of thing. Not necessarily in front of the jury, but they're going to argue that the case is worth tens of millions of dollars. Well, if the defense attorney at the outset, either at the opening to plant this message into the jury's head, or at the closing, or throw out anchors and says, okay, we understand that there may be an inclination if you find liability and if you're going to award damages, to award damages. But let's be realistic here. The medical bills were $13,000. There was one surgery and it wasn't a major surgery. They're back to work. They're back to playing with their grandkids and driving to and fro. So the case, if you're going to give them something along the lines of, $200,000. And if the juries have this number in their head where they've heard tens of millions, but then you have an attorney also in the room speaking to them directly and saying, okay, look, we get that you may want to award something if you find liability. Of course, there's that burden, but let's be realistic here. Let's anchor it. Let's show you a real number, a realistic number, and you plant that into the jury's head as well. So anchoring can be very effective. And then capitalizing on the stage where we have had recent tort reform. I mean, the Florida legislature did a really good job at passing sweeping tort reform back in 2023. The caps on certain damages, the caps on fees, the burden, switching burdens to make sure that plaintiff's attorneys act in good faith as well. Not just defense has to act in good faith, but the carrier, more importantly, has to act in good faith. Plaintiff's attorneys have to act in good faith now as well. Plaintiff's attorneys would issue policy and time limit demands and say they want the money in 7 or 10 days at the outset of the case. Well, how's that in good faith? How has the carrier been able to investigate properly? How have we been able to assess liability and damages for 7 to 10 days, especially when that may straddle a weekend, let's say? So making sure that the plaintiffs have to act in good faith too, creating more of an even playing field. It was refreshing to see Florida pass sweeping tort reform. It was refreshing to see Georgia, on the heels of the Florida tort reform, pass very similar tort reform as well. We have to see how this all plays out. We have to see what the courts are going to do with it. And it does take time. to develop case law over time to see how this is going to play out. But it's a step in the right direction. So small steps in the right direction. Like I said at the outset, it did not happen overnight. It will not go away overnight. All problems, recognizing that the problem exists is the key, the first key to combating it, developing strategies to combat it, and then also hopefully capitalizing on what the legislatures have seen in many states as a problem for the people who live in that state and passing tort reform in an effort to create a more level playing field in the judicial system are all keys to, over time, reducing the effects of social inflation.
So it sounds like there's a lot of strategies that carriers can employ to mitigate the effects of social inflation. What can a policyholder do to help mitigate the effects of social inflation?
Well, if you're a business employing safety measures, more safety measures than maybe you had in the past, as I mentioned at the outset, litigation used to be a measure of last resort. It wasn't the first thing people thought about if they came to your business and fell. Now it is. Unfortunately, there's a lack of accountability, and that seems to be here to stay a little bit more. So if someone goes into the bathroom at a local restaurant, maybe someone was washing their hands and dripped some water on the floor, there's no wet floor sign, they slip, they fall, it's okay. Well, how am I going to sue? So having regular checks or having regular safety checks, making sure that whatever business you're operating is as safe as possible. If you are driving a vehicle, especially a commercial vehicle, where limits are going to be higher and you're going to be an easier target, making sure that you are driving as safe as is humanly possible, driving defensively. Also, in a personal umbrella level or a personal policy, if you're running an errand, yes, you may be busy. Your head really has to be on a swivel. You have to drive defensively because minor motor vehicle accidents don't exist anymore. It could be a tap, at an intersection, and the damage to the vehicle could look very minimal, but the person that you tapped is likely going to oftentimes consult a lawyer before they even consult a physician, have multiple surgeries, and then you're going to have the policy in time of demand follow shortly thereafter. So it doesn't have to be a major collision. It doesn't have to be someone, running a red light or running a stop sign. It can just be two people rolling toward an intersection, one tapping the other, and a minor accident can turn into a policy limits type of case. So staying off your phone, paying attention when you're driving, limiting distractions, those sorts of things. Policyholders can help themselves in those regards as well.
Right. And I think you'd said, making sure that they have safety measures in place, maybe reviewing their risk management policies
Sure.
and procedures
hmm
to ensure that they have those in place as well. And I think also, would you agree, being involved in the litigation themselves, making sure that they understand what's going on and are involved would probably also help.
Absolutely, because as being involved as opposed to being detached is always going to give you more incentive. Understanding that there may be risk, not just risk to your policy that you purchased through a company, but risk to your personal assets. That would make me personally involved. So getting more personally involved in lawsuits, and also you mentioned social media before. People have a tendency to post a lot of what's going on in their lives in social media. So people sharing that information. Hey, I was just involved in a lawsuit, and this is what it looked like. And they share that information with their friends or maybe business owners in a neighbor in their community, and that helps those business owners as well, those business owners or policyholders for somebody. So spreading that information as what it's really like when you enter the court system, the legal system, what the road you may have to go down if you don't employ safety measures, the maybe increased incentive to um, salt your parking lot or make sure that the handrail is steady as people enter your business, those sorts of things, because you could be staring down lengthy and costly litigation. So yeah, policyholders can definitely help themselves.
Thank you, Steve. Where do you see social inflation in the next 5 to 10 years?
It's here. It didn't occur overnight. It's not going to go away overnight. Increases in tort. If we see additional states pass tort reform, and we are hearing Once again, this is not stuff that you see that where it's certain, but you hear it anecdotally that other states are going to be passing tort reform as well. That will help create a level playing field. Small steps, like I mentioned before, humanizing insureds, pushing back on policy and time limit demands, really pointing out when plaintiffs' attorneys maybe cross certain lines. I'd love to see carriers work together more the way plaintiffs' attorneys work together in an effort to combat what plaintiffs' attorneys are doing. Working together on this side would be beneficial as well, more of a united front. With those small steps incrementally, I could see making strides towards reducing social inflation. I don't think it's going to go away in 5 or 10 years, but it didn't get here in 5 or 10 years either. But every step toward progress is a step in the right direction.
So I think the takeaway from today is that social inflation is ever present in the insurance industry, but it also sounds like there are things that carriers and policyholders can do to mitigate the effects of social inflation.
And state legislators as well, which we saw in Florida and Georgia recently, which is a very good sign. So, and that takes the longest sometimes, is to get this on the radar of state legislators, to make this an important issue to really make an impact. This is affecting people's ability to get insurance in certain states. It really is helpful to have state legislators recognize that as well, because they are ultimately in the best position to create an even playing field when it comes to social inflation.
Well, I want to thank you for your time today, Steve, and discussing social inflation with us. And I want to thank our listeners for tuning in. Please stay tuned for the next installment of In Trend. Until then.
Thank you.